So this is the key level I'm anticipating to see the dollar draw into right here, the equilibrium zone. So I'm going to remove this because I don't really see anything right here that could facilitate for a rejection on the dollar to go to the upside. Besides, it's coming down here. And then below the equilibrium zone, we have the inefficiency resting right here. So this inefficiency is a key level that I'm watching as well. So when dollar comes into this key level by next week, remember we have non-farm payroll next week. So I'll be watching that very closely. So it's either price is going to dive in here, use here as support, go to the upside, or we could continue lower to run the sell side liquidity. Remember this low right here. This low right here is a high resistance liquidity. So price can potentially have difficulty running below this low. So we're going to look at Euro US dollar, see what the market is doing on Euro US dollar. So for Euro US dollar, so far we're still trending to the upside. And like I said yesterday, this is the key level that I want to see Euro US dollar come into. I said this yesterday. And if we're to see any major retracement on Euro US dollar, is going to be from this key level. And besides that, I don't really see any other position where we could potentially see a huge, massive rejection. And one of the reasons why I'm still watching this key level is because this high right here is a high resistance liquidity. I'm going to outline that as well so you all can see. So the reason why it's very essential to take note of these things is because when you mark out the high resistance liquidity, you can potentially be looking out to see the reaction from those kind of key levels when price comes into this position. So right here, I wouldn't be surprised to see an expansion on the dollar from on the euro next week. I wouldn't be surprised to see an expansion on the euro by next week to gravitate into this position, and then I'll be watching it closely. So if we are to see any major retracement on euro, it's going to be from this key level, in my opinion, and most likely we could see a run on sell stops and run on sell side liquidity as well, because right here, so you can see very nicely price has left this liquidity right here. So this is low resistance liquidity. So we'll also be very mindful of that in case of next week due to the non-farm payroll. Anything can happen, anything can be the driver to take price to run this sell side liquidity. So I'm going to redo an analysis this weekend to really find out key levels where we could be anticipating to see the euro come back into for us to potentially look for a continuation to the upside, because I still remain very bullish on euro. Like I said, because my 12-month time frame is still showing me bullishness, and all my analysis is for continuation to the upside on the euro US dollar. So that is what I'm watching. And if you do have any questions based upon my analysis on the euro US dollar, you can drop it on the chart. Another thing I'm watching, this overall high low resistance liquidity. So the non-farm payroll next week can also facilitate price to expand higher to rally above these highs. And look what's resting above it: inefficiency. Inefficiency resting right here. So price potentially come there and mitigate the inefficiency and potentially even continue higher, because we still have this overall low resistance liquidity resting right there as well. So the next one, we're going to look at AUD US dollar. We're still currently on the trade, which is running very, very beautifully. For the people who are still in the trade, I believe you're still in profit. We've not closed the trade, but I'm anticipating to close the trade today, being Friday, so we can just close it with the profit we've made this week and then focus on what we can potentially make moving forward for next week. For now, we're currently in 1:8.3% profit, which is phenomenal. But I want to close the trade at a 1:10 for the week. I just want to close at a 1:10 for the week. So hopefully, if price smashes through that key level, then we'll have to just collapse the trade and just move on with other analysis, and also look at other key levels price could come to for next week, because next week is going to be a very big week because of the non-farm payroll. Anything can happen. Overall, I still remain very bullish on AUD US dollar. I still want to see higher prices on AUD US dollar We have the low resistance liquidity resting right here. I still want to see that violated. We also have a low resistance liquidity resting right here. I still want to see that violated as well. And on the weekly, we still have the inefficiency right here. We have a high resistance liquidity, and so far you can see how nicely price came there, and then the high resistance liquidity was able to facilitate for a down move, and price came back again, struggled to rally above it, still came back down, more accumulation. So right here I want to see more expansion to even blast through this high resistance liquidity and also mitigate this inefficiency. And overall, I'm still very much bullish, like massively bullish year on year on AUD US dollar. Year on year, I'm massively bullish. I want to see AUD US dollar gravitate to extreme highs for the next 2 years. I want to see an expansion on AUD US dollar because since we've been bearish on AUD US dollar since 2011, you can see how many years ago that has been. Since 2011, AUD US dollar has been bearish. That is a very long time to be bearish. So it's not something out of the ordinary to expect to see bullishness in this currency, because for this currency to have been bearish since 2011, you can see the data is right here. Since 2011 it's been bearish, and if you check from 2011 to the current year, it's 13 years. So there's no way we're going to be in a 13 years bear market and we're not going to see a minimum of 2 to 3 years of bullishness, 2 to 3 years of bull market. It's very, very expected. That is the reason why a lot of the times when I'm reading the news and they're saying all these sorts of things about the currency, this currency, that currency going to parity, going to lower lows, I'm like, we've been hitting lows for years. What makes you think we're going to keep hitting lows for literally the rest of our life? It doesn't work that way. Whatever goes down must go up, and whatever goes up must come down. So right here, we've been going down for a very long time. For 13 years, we've been going down. Now is the time to go up. Everything aligns. Looking from the 12-month time frame, I'm seeing the 12-month massive break of structure right here, and I'm seeing price come down to an extreme discount, taking a previous low liquidity. Billions of dollars of liquidity were resting below this low, and they all got taken out. And after that mitigation, we came into an inefficiency, into an extreme discount. This is where the institutions are accumulating, and after they're accumulating, they use the news to scare the retail traders out of the market, tell you that the world is going to end, this is going to happen, that is going to happen, and scare every single retail trader out of looking for buys. And then the retail traders keep looking for sells, consistently looking for sells without understanding where we are in the marketplace. When we are in a discount position, yes, you can catch a sell, but it's not a good, profitable trade. If you catch a sell, it's a 1:3, 1:2, 1:4. But when you catch a buy, just look at how beautiful this trade we're in. We're currently on AUD. We're up 8% on one trade. If you're risking 1% on that trade, you're up 8% on just one single trade. In a year, the hedge funds are aiming to make between 10% and 20%. That means if you were risking 1% on just one trade, you've literally made half of what a hedge fund is looking for to make for the year on one trade. So that is the benefits of trading with the trend rather than trying to trade against the trend. Because in my opinion, the trend is to the upside, irrespective of the fact that this has been going to the downside. The overall market structure is bullish. High, low, break of structure, retest. All we want to see is an impulse move, a continuation. And look at where we are. Right here, this line is equilibrium. Anything below it is discount. What do you do at a discount? What do you do on a Black Friday? When Amazon tells you on a Black Friday, what are you doing? You're buying. You're looking for the things you've been saving in your watch list for ages. You're buying them. The same thing goes with the market. When you see prices at a discount, you are buying everything that you see that aligns with your strategy. If it aligns for a bullishness, you're looking for a buy on it. And if it doesn't work, you're looking for another buy on it until it works and takes you to the upside. And that is why you can see this AUD US dollar trade. It worked out very nicely, and we're in it, and it's going very nicely. And as you can see as well, even the Euro US dollar trade as well, you can see how impulsively Euro US dollar is going so far, really expanding higher because the 12-month time frame is bullish. All we want to see is a continuation to the upside and expansion. Same thing goes with gold. Like I was saying, gold is very bullish, irrespective of the fact that so many people are saying they want to see gold go to the downside. I am 1001% bullish on gold. The first entry I posted to the members, the first entry was supposed to be right here on gold, but for some reason I actually did another analysis and it was showing me the price to potentially come down to this red line, and that is why I shifted the entry. But unfortunately, price came to the first entry, and if we didn't move our entry, we would have been in this trade. And right now, we've been in like 1:4 risk to reward trade because the overall trend is to the upside. And look at this low resistance liquidity. Look at how nicely price smashed through that key level. So everything aligns for a continuation to the upside. And look at another low resistance liquidity resting right here as well. It's another target that price could potentially come to smash through that position. And look at another one, low resistance liquidity resting at the all-time high. Another key level, price can easily potentially go to the upside to smash that key level. So you can see that very clearly. The low resistance liquidity resting at the all-time high. I wouldn't be surprised to see an expansion to rally above that key level. So that is my analysis. So for USD card, USD card is just dropping and dropping after we broke this low right here on the 4-hour time frame. After we broke this low, I was anticipating to see price come to the upside to mitigate this position because this was the last up close candle before dropping to break structure. For some reason, price didn't get to that position before it dropped. So personally, I'm not gonna just jump in and start looking for any buys or anything on USD card. If we potentially come back in here, maybe by next week due to the non-farm payroll, if price comes in here and shows me a 50-minute shift to market structure, I'll look for sales on USD card to continue lower, and I'll be targeting the low resistance liquidities resting right here. So I've already had it outlined on this chart. So this is low resistance liquidities. If we do come in here, the yellow box, I'll be looking for a break of structure on 15 minutes time frame and then take a sell from there. So that is what I'm watching. I'll be watching that very closely. And if I do see that, then I'll be sharing the trade idea with members as well. So that is my analysis on USD card. We're gonna look at British pound, Japanese yen from the 12-month time frame. So for British pound, Japanese yen, irrespective of the fact that we've been bullish for the past 1 year, you have to understand that the overall market structure on British pound, Japanese yen is bearish. We're consistently creating lower high, a lower low, lower high right here, a lower low. And look what we have right here. High resistance liquidity. So we have a high resistance liquidity resting right here, which means even if price wants to gravitate to the upside and continue higher, this is an area of difficulty. This is an area of resistance. This is an area that could facilitate for a rejection and potential continuation to the downside. Now, it's not a guarantee that we're going to go to the downside from this key level. If we use our Fibonacci from the low to the high, you can see very clearly this line right here is our equilibrium. And you can see already we're at an extreme premium. So potentially, I'm not going to be looking for any buys anymore on British pound, Japanese yen, and that doesn't mean that it wouldn't continue going to the upside. Price can potentially decide to continue going to the upside. Now, what I'm looking at is this was the last move to the upside before a drop that broke structure. This is our break of structure right here. Break of structure. So this break of structure, this was the move to the upside that ignited that break of structure to the downside. So I'm watching to see price mitigate this position. And once we're in there, this is a 3 months point of interest. I'll be watching for 1, 2, 3, a daily break of structure. So if I do see a daily break of structure from this key level, then I'll be looking for sales on GBPJPY. But if I don't see that, then I'm just going to be on the sideline. But if I do see a daily break of structure from here, I will be selling this very, very hard. And I'll be targeting a lot of low resistance liquidity positions. So right here, we have high resistance liquidity. Right here, we have low resistance liquidity. Right here, we have low resistance liquidity. So I'm going to remove all the buy analysis that I've had on my chart because right now they've all become irrelevant. And right here, also have low resistance liquidity as well. Low resistance liquidity as well. The reason I'm outlining all these key levels, all these areas, is because if I do see a daily shift in market structure, I want to know key levels that I'm going to be targeting for take profit positions. Key levels that are low hanging fruits positions, key levels that price can easily smash through, and key levels that price is going to encounter a lot of difficulty to smash through those positions. And this right here is an easy key level price can run through, easy key level price can run through, easy key level, easy key level. So we go to the monthly time frame. Along the monthly time frame, we can see very clearly this is our move, this is our point of interest. It's very evident on the monthly time frame. So it's either price is going to mitigate the bodies of the candle. So I'm interested in the bodies of the candle. So it's either we'll mitigate the bodies of the candle or we run the liquidity at the buy side. Whichever one it's gonna be, all I want to see eventually is for a break of structure on the daily time frame. And once I see that, I'll be looking for a sell. If I don't see that and price continues to go to the upside, then most likely price might be hunting for the buy side liquidity resting right here. So that is what I'm going to be watching. I'm going to be watching that very closely, and we look at the weekly, and then we now scale down to the daily. And what we do on the daily now is we start to annotate the daily lows. This is our daily low, and right now we're creating a high. So if price creates another low, I'm going to outline that as well. Creates a high, I'm going to outline the low. I'm going to keep outlining the lows to keep tracking the low that price is consistently going to be creating until we get into this position. And if for any reason we'll break a daily low, then I'm all eyes on looking for a daily and a potential 4-hour break of structure. So I'm working with daily or 4-hour break of structure. The reason 4-hour break of structure is because right here it's also the 3-month time frame, which is showing me this is my point of interest. If I look at the monthly, it even looks way more clearer because this was the last impulse move before dropping to break the structure. So once we're here, I'll look for a daily break or a potential 4-hour break of structure. So I'm going to edit that and put daily or 4-hour break of structure. So whichever one of the two is going to be perfect. And once I see that, I'm looking for a potential reversal in the marketplace. So that is my analysis on British pound, Japanese yen. and I'll be watching it very closely. So another one I'm going to look at is I'm going to be looking at the indices as well. So trade that I posted yesterday on the indices. It was a buy setup on the indices, but we eventually it got taken out at break even. And then after the academy closed around 4 p.m., I got another entry, but it was really a very fast one. Before I could even type out the trade, it's already left the entry. So I just felt like even if I posted it, the members are not going to be able to get in on the trade. So that's the reason why I didn't really drop it to the members. But it's a very beautiful trade. It's going very nicely in profit. And I'm also going to share with you the reason why I got into the trade. Overall, I'm very bullish on NASDAQ. So I'm very bullish, as you can see. We have our inefficiency. We're overall bullish. And right there, we have the inefficiency. We go to weekly inefficiency, still resting right there. Low resistance liquidity. Price mitigated it. We go to the daily. And on the daily time frame, we have inefficiency. Right here, price came down, mitigated the lower side of the inefficiency. If I clear my chart, you can see that very clearly. Right here, you can see price came down and mitigated it right there. So after that mitigation, all I want to see is a 30 minutes break of structure after mitigating that position. And right here, you can see a high and low, a break of structure. This was the last down close candle before breaking that structure. So now one thing I actually noticed in the marketplace is another way to know the liquidity price is coming to take using the line chart. I talked about this the other day, but I'm still going to show you with a live example. So right here, if we use this line chart, you can see this was the last down close candle before breaking the structure. So for me to look for a buy on this, I would like to see a run on liquidity, and the liquidity is this key level. So once price comes and runs this liquidity on the bar chart, I will be looking for a break of structure on 5 minutes to buy it and take it to the upside. So we'll go to the bar chart and you can see the red line. And so on this one, it didn't mitigate it. So let's check on Oanda. So on Oanda, you can see the red line right there. That's the red line. So we go to, so you can see on this one, it mitigated it. For some reason, Black Bull didn't mitigate that position. But for Oanda did, and Oanda was the one I was using for my analysis. And the moment it mitigated that red line, you can see we'll still have an inefficiency above the red line. So we want to see a 5 minutes break of structure. And right here, you can see a high and low break of structure, inefficiency, price mitigated at it, and then we saw this expansion to the upside. So it's a beautiful trade, up very nicely. I think it's up around 1:6 or something. But I'm still anticipating for a continuation to the upside, potentially to run this buy side liquidity, low resistance liquidity resting right here as well. So that is my analysis and what I'm looking forward to see on the indices. So I appreciate you all for tuning in. If you do have any questions, feel free to drop it in the chat. And until next time, I'll talk to you soon.